Inflation in the United States came out exactly in line with what experts had predicted. Is this good news for Bitcoin, and what does a key technical indicator, which has just tightened to its lowest level since 2023, tell us? What is happening with METAPLANET, and are they about to start selling Bitcoin just like Strategy did? And which crypto platform is the latest to announce that it is shutting down during this painful bear market? Today's video will cover all these topics, so we hope you find it interesting. Keep supporting us and we won't stop the videos anytime soon. Inflation in the United States for July came out exactly within the range economists expected, with headline CPI landing between 3.3 and 3.4%, showing that price pressure remains stable and predictable. This is important for markets because in recent months there were concerns that inflation might accelerate due to geopolitical tension and changes in energy costs, but the July report confirmed that analysts had assessed the trend correctly and that there were no unpleasant surprises to shake the macro environment. The monthly increase also stayed within expectations, suggesting that consumer prices are moving in a controlled manner. Special attention goes to core CPI, which rose to 2.5% after being lower in June due to temporary declines in energy prices. That drop was viewed cautiously because it resulted from a brief de-escalation in the Middle East, which was not expected to last. Therefore, the current rise in core inflation is completely logical and fits the forecasts of analysts who expected this component to normalize. When both headline CPI and core CPI come out exactly within the projected range, it sends a clear signal to the markets that the Federal Reserve has no new pressure to tighten monetary policy, a reassuring sign for the crypto sector. Bitcoin briefly jumped above $64,300 when the data was released, but later pulled back slightly and it's trading around $63,800 at the time of the recording. Larger altcoins also show no drama and continue moving roughly within yesterday's ranges. The total crypto market cap is around $2.26 trillion. Bitcoin's short-term reaction to the CPI numbers was minimal, but should we expect something more significant in the coming days? Many analysts say yes. Ex-user Ted reminded that Bitcoin jumped more than 10% in the week after the CPI report in June and around 7.5% after the July data, although in those cases inflation came in lower than expected. Ex-user Gerla pointed out that every CPI report since last August has triggered strong volatility, with several cases leading to sharp price drops. However, when inflation has matched expectations, Bitcoin has often moved upward in the following days, giving us a good reason to stay optimistic. Meanwhile, the debate on X continues about whether the bear market is nearing its end. Ali Martinez, who recently shared several strong arguments for why bulls may soon take control, joined the discussion again. According to him, the downtrend is in its final phase, predicting one last drop to $57,500, followed by a powerful rally to a new all-time high of $180,000 sometime next year. Users Ted and Max Crypto also commented on the matter. The former believes Bitcoin has a decent chance of pumping as long as it stays above the crucial $63,000 level, while the latter claims the asset has broken out of its 10-month downtrend and may be gearing up for a new bullish impulse. Poseidon, on his part, envisions a push above $70,000 in August, followed by a correction below $60,000 in late September. We now move on to an interesting indicator called Bollinger Bands. This is one of the most popular tools for measuring volatility in the crypto market and consists of three main lines. In the middle is the 20-day moving average, which acts as the baseline, and above and below it are the upper and lower bands positioned 2 standard deviations away from the average. When the market is calm and movements are small, these bands tighten. When volatility increases, they expand. The key point is that strong tightening almost always signals an upcoming big move because the price is literally compressing and preparing for a breakout in one direction. That is exactly what we're seeing with Bitcoin right now. The Bollinger Bands have tightened to their lowest level since October 2023, a strong sign that the market is preparing for an explosive move. History gives us a clear idea of what this can mean, because the last time the indicator was this tight, Bitcoin launched one of its biggest rallies in recent years. From October 2023 to October 2025, the price surged more than 330%, making this period one of the most profitable for long-term investors. Of course, this doesn't guarantee the same scenario now, but the fact that volatility is compressed to similar levels is a clear sign that the market is at a critical point. Usually such tightening is followed by a strong breakout, and whether it will be upward or downward depends on the macro environment, liquidity, and the behavior of major players. In recent months, strategy shocked the market by starting to sell part of its Bitcoin holdings, proving how serious this bear market is and hinting at financial difficulties within the company. To make things worse, rumors recently emerged that the Japanese company METAPLANET, which also holds massive amounts of Bitcoin, might be preparing to sell. The speculation was fueled by the fact that the firm moved 5,014 BTC worth over $320 million between its addresses within 24 hours. CEO Simon Gerowich, however, calmed the situation by stating that no sale is happening and that this was simply a routine internal operation. He added that METAPLANET continues to hold 43,000 BTC valued at over $2.7 billion at current prices. We finish with a rather unpleasant update. BOLTZ, the bridge that enables instant, secure, fully decentralized swaps between different Bitcoin layers and networks, officially announced that it is shutting down operations. Over the past months, the platform has been hit by increasingly complex and aggressive AI-assisted attacks. Some of them even managed to cause damage to the service, but because BOLTZ is non-custodial, user funds were never at risk. All losses were absorbed by the company itself. The team decided to suspend the service to prevent further damage and later concluded that as a small 5-person startup, they simply do not have the resources to withstand attacks of this large scale. This led to a major shift. A group of experienced Bitcoin developers and investors stepped in to take over BOLTZ and provide the capital and engineering power needed to revive the project. Work on fixing vulnerabilities has already begun, and the goal is to bring the platform back online as soon as possible. The original founders have stepped down and will no longer have any formal role. BOLTZ is not the only platform to fall under the pressure of this brutal bear market. BitMEX and Bitmark also announced they are shutting down, showing just how difficult the situation has become for crypto companies and how sharply liquidity in the sector has contracted. That's all for today, team. Have a great and successful day, and see you tomorrow.